TradeTheMBA.com. This is John. This report is for the 22nd now. And well, from the international scene, obviously you have the Iranian negotiations, which neither here nor there. Big shock that both sides talk past each other on the political front. But what we're concerned about is what does that do to our readings? What does it do from an economic standpoint? And the reality is, when we look at the run up that we had, it was all pretty clean. You know, magenta over yellow, staying above the 33 level. Pretty simple. MBI white below the 10 keeps it easy. We started to get the breakdown. Well, this first move was nothing. We didn't really consider it much of anything because you had no short activity. But then, as we were starting to climb into here, we started to get some shorts saying, hey, maybe things are a little bit beyond. And that caused a little bit of a flush. Not a whole serious event. But now we're getting into this more erratic return, and it's not as clean as any of this was going back into April, May configuration at all. So, still bullish overall within this kind of ugly setup, but it won't take much to break down. You can see from a DOC standpoint, once you get green and cyan playing back and forth with each other, you don't get a whole lot. What we're looking for is to see that spread increase, which would be cyan growing in relation to green and even orange remaining above steel in this particular case, because now you no longer have a steel reset that you had from before. So dips here become more problematic because you've got nothing really to support them underneath once it begins. So that's a big difference. So people will look at a chart and think, oh, well, we're the same configuration. No, it's not even close. There's been a broader deterioration in the overall bullish readings than we had before, even while you look at the situation of NASDAQ being at the same highs. It's not the same conditions. And so don't be fooled by that. It's pretty clear from the readings of what we're seeing that things are very different. From an NQ standpoint, though, you can see you clearly still have cyan under red. That changes the dynamic. It's much more bullish from that standpoint. But again, you're looking at MBI white, and as long as it continues to fall and magenta stays above that 33, great. Um, Will we see any shift dramatically in the earlier time frames? Absolutely. So we look at 50K, 5K, it's going to jump right out at us as it starts to take place. What you are seeing, though, is skepticism here. 74, that's quite a premium uh, for a deal that's supposedly done because everyone realizes the deal's not done, that this was just a postponement. As long as the strait remains open and you get product moving, yeah, but this is going to take weeks for some of that to, number one, get to its destination, two, offload, come back for more. Um, so, yeah, that's war premium that's still in place and it's steep. So it's not going to be helpful. It's a continued drag. Now, fine, you still had economic growth while it was there, but it's just like it's like riding the brakes, on a flat level surface. There's no reason for it, and it just drains things. You're just going slower than you would using more energy. Plain and simple. Euro, still way elevated. This is part of that disdain for Trump, and of course you saw the latest row with him in Italy. It's interesting that Maloney wanted pictures with him. While it's all theater and nonsense, I think Trump recognizes that he basically was left to hang out and dry. But then again, he really didn't need to get involved in the situation in the first place, and there's broad implications for it. So. Yeah, it's problematic, and that's probably why you sense the hostile rhetoric of where he's just going to take over Iran and run the Strait of Hormuz and charge fees. Yeah, it's useless, really. This doesn't serve any purpose. What it's not doing yet is it hasn't spiked gold in that, and that's just simply because you still get a better return elsewhere at this particular stage. And this is that relative ratio of, as gold moved a little further than it should have relative to where inflation or devaluation is a better way to describe it. I think inflation is the wrong term for it. The increasing price relative to the same product is just a clear indication that you've lost purchasing power. They disguise it with these nice terms. It's not an inflation. You basically had devaluation. Um, that said, you know, long way to go for the market relative to what the move of gold was, and how much longer will be before gold and even some of the crypto. It's gained a lot of excitement because they're talking about this, tokenization shift, but you really haven't seen much excitement through much of the crypto space in that. It's just there's nothing new under the sun now. It's all been discovered. It's all known, and there's just really no excitement. And then some of the models, strategic in them, really suffering here with the declines. Now, of course, you look at the charts, and it's supposedly until the end of October that this should remain in the doldrums before starting its next ramp up. And that's very possible because we would expect that after the November elections, the war would need to begin again. Um, Certainly isn't likely that it's going to get resolved at the negotiation table. Could be a shocker, but Iran seems still pretty belligerent. I don't think that there's any indication that they've changed their view on anything. So here's your Juneteenth trade right there. Not a whole lot of anything. Pretty much flat, and looks like it's pushed back up now to pretty much where the close was. So sort of a net zero at this particular stage from a 50K standpoint, at least. And it's still relatively bullish overall from a 50K standpoint, even though you're hanging right at the 50%. The problem with that is that because you're at the 50% and not the 100%, or at least over the 76 at this particular stage, a dip back down below, particularly the 25 with magenta, and you're looking at a move to zero, not to the 50%. Uh, it won't hold. So just keep that in mind. Uh, there we go. Flip it. That's the Deocon paint. So you can see how that was just a simple European trade. And then, brief gap down to fill that in, test it, see if there's any new additional stops or anything to hit. There wasn't. And that's caused the pushback up to there. And that becomes the other question. Uh, People just aren't necessarily have a reason to sell. So you've got to have an impetus, something that the short side, when they talk about their technical readings, it's like those are fine, but at some point you actually have to have a reason to. It's not just because there's a short signal. It's like you have to see some kind of material reason why things have deteriorated or why there's a shift. Um, and while we continue to look for that, as it expressed itself at this particular point, which is why I say, as long as there's growth, you know, it's not the issue. This was the whole question of, 08, '07 situation. It's like, while you're leading into it, you can still see things becoming very uncomfortable and growing to a situation where, it's problematic. But you also have to have a flip to where unemployment's rising along with price. There's a whole lot of dynamics that can take place within it, but literally what we're going to be looking for is the growth dynamic still existing? Plain and simple. And that's the nuts and the bolts of it. So anything relevant, I'll put on the team chat. I'm heading to the water because it's a little warm. So I don't know if I'll be around for the chat, but uh, if you leave anything by tomorrow or whatever, I'll get to it. Have a good one. Trade well.